Hey friends, Lucian here with the Bullish Bears team. Wanted to make this video on the different types of trading styles. Before we begin, I just want to be clear, there's not a right way or a wrong way for a trading style. So meaning, if you're more naturally a long-term trader, doesn't mean you need to be a day trader. Or if you're normally a swing trader, doesn't mean you need to be a day trader. Again, and also, when you're learning and you're going through the process of trying to learn trading, you might start off as, let's say a swing trader and become a day trader, or you might start off as a day trader and then eventually go into options. So, trading is like, you got to treat it like a profession, right? Sometimes your profession or your careers, evolve, they change over time. Same thing with trading. If you're not comfortable at first and you're trying to just discover your niche, sometimes it takes a while to learn, and that's totally okay. And so that's why we tell people that join our community, don't rush. Take a lot of time. Take several months to really practice. If you're looking to get into trading and you want to hit a home run and make money right away, that's probably not going to happen. Sometimes people get that beginner's luck, but when the luck wears off, you have to know, the very important things like support and resistance and patterns, right? It's so important to know that stuff. You need to be able to know when to buy low and sell high. And that goes, saying buy low, sell high goes whether you're doing day trading, swing trading, options trading, long-term trading, doesn't matter, right? The whole key to everything with trading is you have to be able to, again, manage your risk, know when to get in, when to get out, and knowing when to also cut your losses when trades go against you, and trades will go against you. It happens all the time. So that being said, let's take a look at some of the different strategies, and we'll go over a little bit of a brief explanation or overview of each strategy. If you want more training, you could just go over to our website. We actually have right over here at bullishbears.com several free courses on all these different topics, right? So, so there's day trading, swing trading, options trading. I'm just going to focus on those right now. And give you kind of the benefits or the positives and negatives of each, right? So with day trading, one of the positives, you can get in and get out, right? Also, again, another very handy strategy we like to use, or resource we like to use, is Investopedia.com. So you could just go over to a site like Investopedia and just type in day trading. So if you want more of an in-depth explanation, you can kind of just go over here, type in day trading, what is day trading, an introduction to day trading, different day trading strategies for beginners. Again, day trading, some of the benefits are you're able to get in and out of your position that day, and many times within seconds, if not a few minutes as well, right? So the benefits of that are you can get in, get out, take your profits very quickly, and you're not really at the mercy of holding the markets long, holding your positions in the market longer term and having your positions being susceptible to news, right? So a benefit is that you're able to get in, get out, take your profits. A drawback is you have to be in and out very quickly, and you have to be able to make rapid decisions. And when a trade goes against you, you better be able to cut your losses very quickly. So if you're a very emotional trader, you don't have the, if your brain likes to take time to make decisions, you're very methodical, then day trading might be challenging for you at first, right? Because you have to make split-second decisions. But again, sometimes you could be like a very methodical trader and then, over time get more comfortable day trading, and it just makes sense, right? With anything, it takes practice, right? So that's what we tell people when you come in and you want to learn trading, you better practice, make several hundred trades to see what your trading style is. So again, day trading, you're in and out very quickly, and you're looking to scalp 10, 15, 20 cents on a stock, right? So you're looking to use your account as leverage to scalp little gains, and those gains add up. If you buy 1,000 shares of a stock and it goes up 15 cents, that's, $150. If you bought 4,000 shares, that would be $600, right? So if you do that each day, you can make a lot of money day trading, right? Many people they choose day trading as a whole profession, right? You could do really well day trading and making a living. Now, another drawback with day trading is you need to have an account if you want to be able to day trade effectively, you need to have at least $25,000 in a day trading account. Otherwise, you get what they call a PDT rule, or pattern day trader. Basically means you can only make 5 day trades within a rolling 5-day calendar period if you have less than 25,000 in an account. So if you have less than 25,000 in an account, you only get basically 3 day trades in a 5 rolling day calendar. So again, you want to make those trades count. You can be an effective day trader just day trading 3 days a week, but you have to be patient and wait for the right setups, right? You might scalp the same trade 3 days or 3 times in that day, and then you would be done for the week. But if you do it right, you can build your account that way. So we tell people that are day trading, before you go and, again, there are other brokers that you don't have to have 25,000 in an account. You can use another broker that allows you unlimited day trades with less than 25,000 in an account. But we tell people, make sure you know how to at least day trade 3 successful day trades a week first before you go and get a broker that allows you unlimited, because that's just a perfect way to blow up your account. So again, a potential drawback is you have to have at least 25,000 in your account to be able to day trade or make unlimited day trades. So again, you get in and out of a position very quickly. You're looking to scalp, make little gains. You're not looking to make $1, $2, $3 runs. Those are nice. Those happen. But that's more of the exception. That's not the norm. The norm is your 10, 15, 20 cents. And then the days when, trading might be tough, maybe you're only getting 4 or 5 cents, right? Sometimes it's not always going to get huge home runs, right? So if you do want to look into going into with day trading, again, just practice in a virtual account. We recommend, Thinkorswim, Interactive Brokers, really good virtual platforms to be able to practice, being able to get in and out of trades. They have, again, really good virtual platforms. And when you're looking at day trading, I'm going to show you a chart here. You're looking to basically, what you want to do is you want to have a good daily setup. So you're looking for a good, daily setup, for a good, pattern setup, or for a breakout or a possible gap fill. So you want a good daily setup, and then you want to look for a good 5-minute intraday setup, and then get your entries on a 1 minute, and then you're going to decide whether you're going to get out based on a 1 or 5 minute. That's all a matter of your preference, right? But when you're looking to day trade, it's nice to have, or it's important to really look at a good daily setup as well as a good 5-minute intraday setup. Then look at your entries on a 1 minute, and then determine whether you're getting out on a 1 or a 5 minute, again, whatever your preference is. Next, I want to talk to you about is swing trading, right? So you can just go up right over here, Investopedia. If you want to look at more of the definitions, type in swing trading, or you can come over here and take our free swing trading course over here on our website. But swing trade, now you're holding for, anyway, it's at least a day. So it can be anywhere from several days up to several weeks. Now, when the market is going, let me show you guys a chart here of the futures. When the market, let's go over here. Where is it? Here we go. Oh. All right. So when the market is going like this, it's easier to swing trade, right? When it chooses a direction, when it's going up like this, it's easier to hold longer. You might be able to hold for a couple weeks. But when the market starts doing stuff like this is where it becomes more of a roller coaster, right? So if you're looking to kind of buy and hold for a couple weeks and swing trade that way, your swing trades might be turning into, maybe a day or two. And sometimes swing trades will end up turning into a day trade because of the choppiness, right? So ideally, you want to see a trend in the market where it's either going up or going down. Again, with swing trading, if you do options, you can do option swing trading and buy puts and ride stocks on the way down. With shorting, you want to be very careful. Again, shorting is taking the opposite end of things. So again, I'll talk to you guys about long and short. Long is when you believe a stock's going up. Short is when you're taking it on the way down. So long would be, let's say, buying low down here and then selling high, right? Buy low, sell high. Shorting would be selling high at a peak and buying lower at a valley, right? So selling at resistance, buying at support, whereas going long, it's buying at support, selling at resistance. So with swing trading, the chart timeframes that you're going to look more into are, more of the weekly, the daily or the weekly, monthly. So you're going to want to find a trend, right, in a monthly. Then you're going to want to go into a weekly chart. And then you're going to go into more of like a daily chart and see if everything's kind of lining up, see if the trade is worth taking. If so, then you're going to look at your 5-minute intraday setup again. And then ideally, you want to get a good entry, as best as you can using a 1 minute. But if you're swing trading, you might have more of a leeway getting in on a 5-minute because you're looking to hold it ideally more than a day, right, with swing trading. So day trading, you're in and out. You're using daily 5-minute and 1-minute charts. You're looking for a good daily setup and then a 5-minute intraday setup, and then your entries on a 1 minute. You're getting out based upon a 1 or a 5-minute, whatever you feel more comfortable with. On swing trading, you're looking to hold at least a day, but several days up to several weeks, depending on the market. Again, it can be a lot more challenging when the market is choppy. And what you're looking for is, more of the monthly and weekly charts as well as the daily. And then you're still going into the 5-minute, but you're also another very, very important one is the hourly. So you're kind of more like with swing trading, you might be more along the lines of like the weekly, the daily, and the hourly. It can't hurt to look at all the time frames, right? And just kind of look at all the setups and the patterns and see, again, the more patterns that are in your favor, it's all about pattern, support, and resistance. So, obviously, it definitely can't hurt to look at the monthly if you're in a trending market. But hourly, I'd say hourly, daily, and weekly are very, very important to look at when doing swing trading. Now, options trading, a whole other ball game, but incorporates both swing trading and day trading, right? So with day trading or swing trading, you're basically buying shares of a stock, right? You can also day trade and swing trade options. Now, options is a lot more. I'm not going to go into the in-depth of options. Again, if you go over to our website, you'll see our free options course over there. You can take that. But basically, you're able to trade shares of, let's say, a company like Apple, right? So, most people don't have the funds available to just buy, 100 to 1,000 shares of Apple and trade it all the time. That's a lot of money, $220 right now for the stock, right? So most people don't have those kind of funds available, but options allows you the ability to trade big name stocks like Apple for a fraction of the cost. And you can either trade options and cash them in and actually exercise your option and then eventually own those shares of a stock, right? Or you could just buy and sell the options contracts. So, many people just like to buy and sell Apple contracts. So for instance, I'll show you a quick options chain over here. You'll see where it says open interest right over here. Each number that you see over here for open interest is an equivalent to 100 shares. So if you see 2,300 open interest, each number that you see within there is the equivalent of 100 shares. So, if you're trading something like Apple, you can see there's in the money, which is like below the current price, and out of the money, which is above the current strike price. Again, take our course. I'm not going to go into all the details of that. But just to give you an example, like if you were buying like an at the money contract of Apple, right near at the money, $220, you can see over here, one options contract, you see the bid and the ask right here. Let's say you bought it at the ask. It would be $4.95 times 100. That would be one options contract. So that'd be $495. And you can see all these different time frames over here. These are different times of expiration. But you can control 100 shares of Apple, for, $500. If you wanted to control 1,000, you could just multiply that times 10. That's $5,000. And it's basically when you're doing your support and resistance, you believe Apple is going to go to a certain price by a certain period of time. That's why you give yourself enough expiration. And basically somewhere out there in the world, somebody owns those shares and they're basically selling them or renting them out to you as a premium. And if you're right on the direction of Apple, you can exercise that contract and own those shares, or you could just buy and sell the option contract and make it for profit. So many people will just buy and sell Apple or other, big name companies. And again, without, having to spend massive amount of money, you can, 1,000 times 220, that's 220,000, or you can control 1,000 shares of Apple for $500. Or the further you go out on time of expiration, they go a little bit higher because it gives you more time. So when you have more time value, price goes higher, but also if you bet wrong or the trade goes the opposite directions, time value really eats up your options contract, and that's where you can have those huge swings with the options contract. And again, with options, you could lose all your money, whereas with a stock, typically, chances of Apple going down to zero is probably slim to none, right? But your options contract could easily go to zero if you do not choose properly, right? So I just want to talk to you guys today, just again, about the different trading styles, a day trading, swing trading, options trading. Going long means you believe a stock's going up. Going short means you believe it's going down. Or with an option, if you buy a call, that means you believe the stock is going up, or a put means the stock is going down. So hopefully this video helped you today on all the different types of trading styles.